Okay, hello everybody. How's everybody doing? Good?
Doing good.
Yeah,
Very
doing great.
glad everybody's doing well. I see various individuals joining us now. So far we have five. Still have a minute to go, so let's give them some time. I think this is a good opportunity to make sure that everybody could hear me, take care of all the technical stuff. I don't know. I had a choice between recording on my computer or recording on the cloud. I have no idea, you know. I hope I chose the right one. In any case, I never had those options, but in any case, I will get it worked out. Can everybody see my Excel screen in front of me?
Yes.
Okay, good. Okay, good. So you can see my Excel screen. You can hear me, obviously. And we are recording. So let's just hope everything is fine. My name is Dr. David Caban, and I'm going to be your instructor for this particular section of this course, section 10. The lead instructor gave his Peterson, Dr. Peterson gave his class yesterday, and I encourage everybody to listen to his lectures as well. Okay, because the way I think this is going to work is he'll do the more general type of lecture. He'll do one that will encompass basically everything. And with me, what we're going to do is we're going to focus on the problems, okay, and some sample problems that were given to us, so that we can, these sample problems should correlate with the ones that you have in Connect, okay? And so if I explain them here, hopefully they'll help you out with Connect, but they have to do with the concepts that we should be focusing on. So I'll be focusing on the sample problems, but I'm not just going to do the problems, okay? I'm going to explain the concepts that are necessary, because if I go straight into the problems, then I don't think that's just a good enough explanation based on the ones that I've seen, okay? So let me see. So you can find, let me see if I could pull up. Okay, here it is, but you cannot see the website, right? Can you see the website, yes or no?
No, it looks like the spreadsheet.
The spreadsheet, good. Okay, what about when I do this? Can you see it now?
Yes.
Okay, good. So basically I'm sharing one of my screens, which is exactly what I wanted to do. But I just wanted to make sure. Okay, so if you go into the website, sorry, and you click on week 1, for example, and you go through all these learning materials, you will see on the bottom that it says sample text problems. Okay, these are the ones that we're going to focus on every week for an hour on solving these problems. Okay, so you could go to the sample textbook and you can to the textbook, and you can look at these problems and work on them beforehand or work on them after the lecture, and then I'll explain how these are done, but not just, I'm not going to limit myself to those explanations, okay? So I know I went off on a tangent. First of all, I want to.
Does that correlate? So you sent an announcement out that had 4 different problems than those problems. You had 140, 244, 336, and 340. Are those in addition or just the ones that?
Did I? Really? Did they change these on me? I don't know.
That's what I was like. Yeah, it was one of those announcements where you listed out the weeks, and it looked like it listed out the problems you'd be covering in those weeks.
Oh, I hope they didn't change the problems on me. Let me see which ones I have here, which ones I'm going to explain today.
Okay.
Let me move this. Let me go back to the ones that I'm going to explain today. Let's see if I could find the right sheet here. And let
The
me.
announcement that I'm looking at shows these same problems.
Okay, so these ones. Okay, good. So it could be, I don't know, maybe you got it from somebody else who had the wrong problems. Let me look at my announcement. Let's just go there right now. Let's go look for that one. Which, by the way, announcements now I'm going to do them through the groups page because they're having problems. And when I chose my section, some other students that weren't part of my section were getting my announcements. So going forward, I will go down to peoples. Okay. And then we all have sections. And I will choose my section down here, Caban. Okay. And then I will, oops, let's go over here then. Visit group homepage. Okay. And then I can send announcements through here, which they said would solve the problem. We solved the problem. Okay. Okay.
Yeah, I don't see it now. It must have been one of the other. I had a bunch of announcements from different.
Yeah. I hope this
That's
has
probably what
solved.
it is.
Yeah. I hope this has solved that issue. Okay. So today I sent the schedule of the posting for the discussion board. Did everybody see this? Did everybody get this?
Yes.
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 Okay, very good. Very good. So on these weeks, it's your turn to post the article. By the way, I'm new to WSU, so bear with me. So I don't I've learned everything, but I may hesitate every once in a while. But in this case, I believe you only have to post your article, the person that is indicated here, and the other students must make at least two comments to the articles, two comments on any of the articles posted, okay? And that's the way it will work. The person that posts the article doesn't have to do the two comments based on what I read in the website. So here are the instructions, okay? If it is your week to post an article, post it by no later than Thursday at 11:59. And the week that a student posts an article, this student is not required to post comments on other articles, although you're free to do so, right? If you want to post comments, absolutely. And then here you have those instructions, okay? For this week, obviously it's the first week, and so that we provided the article for you to go ahead and start posting. And so everybody should have already seen that article. Now, prior to this, I was doing my announcements. Let's get back. Let's see, how do I get back? Let me just log out of here, go back from the beginning. I was doing my announcements over here, okay? And this is, as you can see, there's a lot of people putting announcements here. So I don't think this was working out that well. So now we've changed the way in which we're doing it. We're going through each one. So let me look for the one where let's see if I could find mine, just to be 100% sure. Okay, here we go. I think it's this one. Okay, so it says 141, 246. These are the ones that I put in there. So these are the ones that we will be discussing today. So it appears that I do have the right ones. Okay. So, but anyways, we jumped into this because we only have 1 hour, but I haven't really introduced myself. So let me go ahead and speak a little bit about myself. The good thing is that we only have 8 students, so maybe you could just tell me something briefly about yourself too, and we'll proceed from there. My name is Dr. David Caban. I have been teaching now for 8 years. I have a PhD from Florida Atlantic University here in South Florida. I am also have an MBA. I'm a CPA. I'm a CFA, and I've had various trading licenses, Series 766, annuities. I worked for various banks actually not various banks. That's not true. I only worked for one bank, SunTrust, which became Truist. But then I went and I worked for Merrill Lynch as well as an investment portfolio manager for two big investment advisors, international investment advisors. But ultimately, I found what I feel like I enjoy the most, which is teaching, and I've been doing it for the past 8 years. And so hopefully, you know, hopefully it translates well as far as the chats that I give you here today. Okay. Now, in the benefit of giving you the best class, I said I do a small introduction. I'll read your introductions. I do want to do the best that I can to provide you as much information. And I'm not too used to the timing, so I don't know how much time I'm going to have. So I think it's better to play it safe and start helping you out with the lecture. And but I appreciate your attendance. Interrupt me at any moment, okay? Please feel
Can I
free.
interrupt you now?
Absolutely. There you go.
So this is being recorded and you're going to put it in the announcements
Yes.
later on?
Yes. I don't know how long Zoom takes to provide me the recording. It could take maybe 2 to 3 hours. Remember, I'm in the East Coast, so 2 to 3 hours from now, I'll probably sleeping. But if my children let me, but if it's sooner, I'll do it sooner, but if not, I'll do it tomorrow, okay?
Okay, I always like to refer back.
Absolutely, absolutely. That's why one of the things that I always try to do is make sure that I have that recording button on, because the one thing that I hate is when I've given a class halfway through and I forgot to press the record button. It's happened once or twice, but not that often. Okay, so let's get started so that you can, I want to provide you the best class possible. And so I'm going to circumvent some of the initial technicalities and formalities. I did watch the Dr. Peterson's recording from yesterday, and if you watch it, he gives explanations. One of the things that he did say, which I probably should say, there were some issues with Connect. Okay, don't tell anybody, but it was my fault. I went ahead and I synced my section to Connect, and I wasn't supposed to do that. But anyways, that got fixed, and now if you log into Connect, you see all the problems. Now there's a possibility that the grades have not transferred over. Okay, so as you log in a second time, that may happen. Okay, and don't worry if it doesn't happen a third or fourth time. I always have the ability to manually input them for you, but it should happen automatically. If it's quite possible that you logged in and did them before ahead of time, and so it didn't transfer over before they corrected the issue. But now that the issue has been corrected, it should, I believe it should transfer over. And if it doesn't, that's not a problem. I always have access to the scores, and I should be able to very easily manually transfer them over to the Canvas gradebook. Okay. So now we have five problems here, 3 chapters, but I really want to focus on chapter 3 because chapter 1 and 2 are more qualitative in nature, fairly easy to understand. These are concepts that you can read. Once you read them, you know what they mean. You could go to YouTube. There's a lot of YouTube videos that explain them very easily. And so, or you can watch Dr. Peterson's lecture, and he explains it quite well. Okay. And if I have time, I'll go there. But I want to make sure I go to what I feel are probably the hardest concepts. And so I'm going to start with that. And I'm going to start with chapter 3 because it has more quantitative information. Okay. So let's take a look at the problems, and then I'm going to go into a more general lecture, because I don't think if we just do the problems, you're gonna get a full picture of what we're talking about here. So I want to give you as best as possible a full picture, and then we'll go in and we'll solve the problems, okay? First one is about separating costs into product and period costs, okay? So you're gonna see, I'm going to do a little, let's see, where do I have it? A little lecture here, and we'll talk a little bit about that. What's product versus what's period, okay? So that's the first one. So keep that in mind. We're gonna identify product and period costs here, direct and indirect. And when I give my little lecture here, just keep that in mind. The second one is about variable versus fixed costs. So as you can see, we're talking about cost behavior here, right? Variable versus fixed or mix are cost behaviors. Product versus period is another classification of costs. Costs can be classified in various ways, right? There's various ways to describe costs for various purposes. Variable, mixed, and fixed describe how they behave relative to certain activity. Product versus period describe how they relate to versus whether they're part of the manufacturing of the product or a period cost. And you'll understand what I mean better when I give the main lecture. Okay, and last but not least, they ask us to do answer some questions on this. So this is what convinced me that it's better if I probably give you a more general idea of how all this works and how all this comes about, so that you can understand what all this means. Because I think if you solve this but don't get the full lecture, then you might not really understand what this is all about. Okay, so let me try to do my best to give that explanation to you. Okay, so company starts off with an income statement, right? They have an income statement, and I'm going to go ahead and make up numbers here. I'll try to remember the ones that I used the last time, so that I won't I think I have something around here. Okay, so let's use these numbers. Okay, so companies usually start with revenues, the income statement. Okay, and let's make this a $100,000, and cost of goods sold, and let's make this 70,000. And so 100 minus 70 is 30. Does anybody know what we call that 30? What is that? What's the definition of this 30,000? What do we call it? Anybody know?
Net sales.
Yeah, some people call it net sales, but let's give it what's in the income statement. Gross what? Gross profit. You familiar with that? Gross profit margin. Okay, so this is the gross profit of the company. Okay, gross profit. It's gross because you still have to cover other types of costs, right? Mainly operating expenses. You have to cover operating expenses. Okay. And so why do we put cost of goods sold here on top and do a subtotal? Because the cost of goods sold relates to the cost of what item in the balance sheet? What item in the balance sheet does the cost of goods sold relate to? Anybody know?
Inventory.
Very good, Alberto. Inventory, right? And so it's extremely important to understand what your gross profit is, because if you don't, this is sort of like step one. If you can't fulfill step one appropriately, then why proceed, right? Skip step two, step three, forget about all this, right? So if I don't know if many of you watch the Shark Tank, I like to watch it, and they're always asking, well, what are your gross margins, right? Because they want to understand just taking into account the cost of the product, are you making enough money to then cover your expenses, right? So that's the gross profit margin. And that's why this is important. This only covers the cost of the product, okay? So these are known as product costs, okay? And there you go. Now you have the explanation of one of the questions over here, right? Which one was it? It said product versus period costs, okay? So these are known as product costs. Now these here are known as period costs, and I'll tell you why they're known as period costs. But first, let me explain what type of costs we have here. If these are product costs, these are all costs that are not related to the product, but necessary to operate, to make the product, but necessary to operate the business, right? So you're going to have corporate salaries here. Okay. You need a CEO, you need a CFO, but they don't go in the factory and make the business, right? And make the product, right? Think factory over here, think corporate headquarters down here, right? So you have corporate salaries. Let's make up a number here. You have advertising, right? Advertising is not necessary for the product. In fact, there's what's the famous company that says that they don't pay for any advertising? They don't advertise. They don't need to advertise their product. Anybody know? What's the famous company these days that says they don't need to advertise their product because they have a CEO that himself is pretty much a walking advertisement.
You mean Tesla?
Yeah, that's Tesla. For good or for bad. Yeah, so Tesla, claims we don't spend money in advertising. We don't need that. So not necessary to make the product, but most companies do, right? You need sales commission to sell, right? And sometimes you have shipping costs, right? And so these are just samples of and these are known as period costs, okay? Why are these period costs versus product costs? These are period costs because these costs are booked in the period in which they are incurred, okay? In the period in which you commit to those costs, that's the period in which you book these. On the other hand, these are product costs. The costs related to this are not booked when you actually incur the cost. They are booked when what happens with the inventory. When is it that you recognize the expense of inventory? When you do what with it? Anybody remember?
Sell it.
When you sell it, exactly. When you sell it, it is a product cost, okay? Keep that in mind because that's important. Okay, so let's go ahead and skip other sections of the multi-step income statement for the sake of simplicity. Let's skip non-operating stuff and let's skip taxes and let's just go straight to this and call this net income, okay? It's not really net income because I don't have taxes or anything, but this is for the sake of simplicity. Okay, so now we have net income, but now you have an idea of what is product cost versus a period cost is, although we're going to expand on these concepts, okay? So let's keep that in mind. Okay, so now we have the balance sheet over here. And the balance sheet starts off with assets, right? And then it has cash. And then it has inventory and other stuff. We're not going to go down the line. Okay. So let me delete this and let me give you an example of how these numbers arise. Okay. So let's say, for example, I am Walmart. Okay. I am Walmart and I buy merchandise already done, complete, right? So my merchandise is complete and it's done. So when I buy the product, okay, let me give myself $500,000 in cash, okay? So when I buy the inventory, I purchase the inventory, right? So inventory comes in and cash goes out, Okay, we're doing a little financial accounting. I'm sure you guys thought you had escaped financial accounting, but no, not yet. Okay, so now you bring inventory in and you, your cash goes out. And let's say I bought $200,000 worth of inventory. Okay, so inventory comes in, $200,000 of cash goes out. And so now my cash is 200,000. Now my cash is 300,000, sorry. And my inventory is 200,000, right? And so notice that when I bought the inventory, I did not book an expense, right? So now comes a point in time when I sell the inventory, okay? And let's say I sold $70,000 worth of inventory. There's going to be two entries that you're going to recognize here. You're going to recognize the expense and you're going to recognize the revenue. So if I sold inventory, the first step, it takes money to make money. Remember that, right? It takes expenses to create revenue. So let's do the expenses first. Cost of goods sold is going to recognize my expense of $70,000, okay? And so my inventory goes down. Inventory worth $70,000 goes down, okay? So you can see here that now my inventory is going to be 130, and I will have my 70,000 over here, okay? And now, don't worry with this negative 70, because simultaneously now we are going to book the revenues, right? So let's say I sold it for $100,000 cash. So I'm going to book the cash and I'm going to book the revenues of $100,000, okay? And so now we have the $100,000 over here, and our cash went up another 100, and we're at 400,000 again. So everybody see that, right? That's fairly easy to see and easy to understand, right? Any issues with that? Okay, so this is really easy when you're dealing with a merchandiser, right? Like Walmart, because Walmart buys the product already finished. What happens when you have to manufacture the product? Now that's a dilemma, right? So when you have to manufacture the product, you're not going to know, it's not as easy. You're not going to pay for a finished product. You need to keep track of the cost of that product in order to know how much that product costs on a per unit basis, right? So you want to follow this, but it's not as easy to know what's the value of my inventory or what's the value of my cost of goods sold. And you can't do that unless you have a good product costing system, okay? So a manufacturer will accumulate costs as they are incurred into the inventory, okay? And there's three major types of costs that the manufacturer is going to accumulate into the inventory. Does anybody know what are the three major types of costs that a manufacturer accumulates into the inventory? If I'm doing cabinets, what am I going to need?
Raw materials.
Raw materials, very good. Raw or direct materials is one of them. Okay, what's the other thing? I'm going to need somebody to make it, right? Melanie, what were you going to say?
I was gonna say employees.
Employees, direct labor. Okay, not all employees, right? The corporate, the CEO is not going to, salary is not going to be there, but direct labor is going to be there. You need somebody to cut the wood for the cabinets. You need somebody to assemble it. Absolutely. And what do you call the building where it's going to be built in? It's not going to be corporate headquarters. What type of building is going to be?
A manufacturing building?
Very good. Manufacturing, for the sake of saving some letters here, let's call it a factory. Factory overhead, right? Factory overhead has a bunch of things in it. Factory overhead has electricity. Factory overhead has supervisor salaries, and so forth and so on, right? So let's go back. Let me show you the cost chart. Let's take a look at the cost chart, because this is going to help us with solving the problem, okay? Here's the cost chart here. Everybody can see this? Okay, I said cabinets, but up here I see guitar, right? So the product cost is going to be composed of direct materials, direct labor, and factory or manufacturing overhead. Direct labor and direct materials are called direct costs because you can directly trace them to the product, right? Factory or manufacturing overhead is called indirect costs because you cannot directly trace it to the product, right? You can't directly trace electricity to the product, but they are allocated, which is going to be part of our next class, where we're going to talk about how we allocate these costs, okay? So you can see this picture here. Okay, keep that in mind because that's going to help us solve a problem. Down here, you have the period costs, things that are selling and administrative. Notice that in both products and period, they could be either variable or fixed, right? Direct materials is variable because the more you spend in materials, the more your total cost goes up. Direct labor tends to be paid, they tend to be paid by the hour. The more units you produce, the more your labor is going to be. Okay, so let's go back to where we were. So these are the three types of costs that are accumulated into a product, okay? So let me start with my GL cash, okay? And I think I started off with 500,000, okay? Doesn't really matter. I just want to make sure that I have enough money to cover all my expenses here, okay? So I go ahead and I purchased $300,000 worth of raw materials, wood, okay? So I'm going to take this $300,000, take it out of the cash account, right? And I'm going to put it into the direct materials account or raw materials account. I honestly don't really care the terminology there that you use, okay? Notice that for Walmart, the merchandiser, there was only one account for inventory. For a manufacturer, there's going to be 3 accounts for inventory, okay? So now I have $300,000 in raw materials, okay? Sitting there. And so my inventory has raw materials of 300,000. Okay? But that's sitting in the warehouse. Let's pretend. It's not even in the factory, okay? So somebody calls me and says, can you please go ahead and send $100,000 of materials into the factory? We're going to start working on it. Okay, $100,000 in materials. We're going to start working on that. Okay, the cost accounting wants to keep track of this because this is the account where we're going to accumulate all the costs as we work on the product. Does anybody know what name we give this account?
Work in process.
Very good. You guys are sharp. I could tell I'm dealing with future MBAs here. Absolutely. Work in process or work in progress. Okay. Work in, I'll put process, but I accept progress as well. Okay. Work in progress. So now my direct materials has gone down, or my raw materials has gone down to 200,000, and I have a work in process account. I'll put WIP for the sake of simplicity. Work in process account that has $100,000. Okay. Okay. And this is going to be important because problem 346 deals with all this type of information. And I'm trying to do this fast so that we can get to the problems. But I don't think you want me to solve those problems for you without giving you all this that's going on now, because you'll understand better how to solve the problems. Okay. So we're going to accumulate costs here. Okay. So now the direct laborers we need to pay them because they earn money. So direct labor payable. Now, typically, wages are a period cost, and we expense it as soon as the employee earns it, right? We expense wages in the period in which the employee earns it. But in this case, because the value that that employee created is being captured and retained within the inventory, I am not going to expense it. I am going to make it part of my inventory value. Okay, my inventory cost. And I'm going to keep track of it and call it direct labor over here. Okay, and so when I pay my employees, I lower my cash and I close my payable, but I still haven't recognized my expense. It's sitting in my inventory account. Okay, so now my work in progress or process is at 150. Same mentality with the factory overhead. Factory overhead could be both variable or fixed. An example of factory overhead variable would be utilities, right? So let's say factory utilities payable, okay? Factory utilities payable, let's make nice round numbers so that all this could be easy to follow the math, okay? So 25,000, again, we are not going to expense this. We're going to accumulate it as part of inventory. What's the word, the technical word that we use when a cost is put into the balance sheet as part of an asset? Anybody know? Starts with a C.
Capitalization.
Say it again. I think you got it.
Yeah, capitalization.
Very good, Armando. Capitalization. We're going to capitalize the cost. Okay? Very good. So we're going to capitalize this into, which, by the way, it's one of the things that a lot of companies are accused of cheating. Instead of expensing things, they capitalize them when they shouldn't, right? But in this case, this is not the case. You could absolutely capitalize these costs because these costs are captured in the inventory, right? Your inventory is getting more and more valuable when you incur these costs, right? So factory overhead, let's put variable here. Oops, sorry, variable here. And then let's put factory rent payable to give you an example of a fixed factory overhead, okay? That way we know that some of them are fixed and some of them are variable, right? Rent is fixed. Rent doesn't go up with production, right? So 25,000 over here, sorry. I'm trying to do this as fast as possible so we could go through the problems. And if I have to stay a little longer, I will, but I know that many of you might not be able to, so I am going to go ahead. Okay, so fixed, okay? So then we pay these and we close our payables, okay? And we pay this and I close my payable and there you go. Now, I did skip a step here. It's not really supposed to go straight from here to here. We have an intermediary step, which I'm going to explain next week. But I did this for the sake of simplicity. Does anybody know the step that I skipped? Anybody know? If somebody knows this step, you'll really impress me. You'll be ahead of the curve here. Nobody wants to give it a shot? Okay. It is applied overhead, okay? I'll explain that next week. The reality is that first we apply the overhead and then we close it with the actual overhead. But that's right now it's too complicated for me to get into that. Just know that overhead eventually ends up in work in process. Okay? And so this work in process could actually be, let's say this work in process is actually two different accounts, okay? Two different orders, okay? Let me just, I'm gonna do this. Hopefully it'll work so that I can, well, I don't want to run out of time. So I have this already done. So let me do this over here. Hey, I don't want to run out of time. So you have the work in process account here, okay? So this work in process here could actually be two different orders, okay? You can see that over here. Order number 1 was for 120. Once we finish that order, we transfer it to finished goods over here. You see that? And order number 2 was 80. It's still incomplete. So it's not in finished goods, okay? Now we know, now we have finished goods over here. If I have $120,000 worth of finished goods, and that helped me create 24 sets of cabinets, then I know that if I sell 14 sets of cabinets for $7,143, I'll take my 14, if this 120 helped me create 24 sets of cabinets, my cost per cabinet is $5,000 per cabinet, right? You see that? That's because you take the 120, you divide it by 24, and you're gonna know that your cost per cabinet is 5,000. You would have never been able to come up with that $5,000 had you not kept track of all of this, right? So when this manufacturer sells 14 sets of cabinets, they know that their cost is going to be 14 times 5,000, which is 70,000. And if they sell them for 7,143, their sales revenue is going to be 100,000. And so you can see how a manufacturing company must keep track, must have a very, very good system to keep track of their costs, so that they can determine their inventory value and their cost of goods sold. And you can see a strong link between cost accounting, managerial accounting, and financial accounting, right? This here is financial accounting. This here is cost accounting. But cost accounting is very important for managerial accounting, because you see how you have this data in the back? Well, this data is going to help you determine if everything went right or didn't. Let's say, for example, the cost was higher than you thought it would be. Well, you could see if direct materials was the culprit, or direct labor, or factory overhead, one of the two, right? By breaking this up. This is part of managerial accounting data. So far, any questions? Any questions so far? So far, so good? Okay, so I want to make sure that we can take care of these problems. And so if we can work together, that's even better. Let's take a look at this. This one is going to ask for a product versus period, right? And it's going to ask for direct versus indirect. So we can take a look at these charts here. We know products have to do with materials, labor, and factory overhead, and period is more selling and administrative type of stuff. Direct is materials, and direct is labor, because we can directly trace them. Okay, so let's go ahead and let's do 334. State income tax. What's that? What's state income tax? Can anybody tell me?
Indirect.
Tell me whether it's product or period.
Period.
Oh, sorry, period. Yeah.
Yeah. So state income tax is a period cost. Very good. Okay. And it's not going to be direct or indirect unless it's a product cost. Okay. Let's just, okay. So when it's a period cost, you just say period cost. Okay. Insurance on the manufacturing facilities. That's key. Manufacturing facilities. So what type of cost is that?
Would that be a product cost?
It's a product. Anything related to the factory is a product. However, is this direct or indirect? Think
I
about
would
it.
say indirect.
It is, because it has to do with the overhead, right? So you're absolutely right. Okay, everybody here getting the idea? Okay, supplies used in manufacturing.
Isn't that product?
It is product because they say you're using it in manufacturing. Now here's the difficult one. Is it direct or indirect?
I would say direct.
Indirect because of
It's
material.
really indirect, because let's not confuse supplies with materials, okay? Supplies are just what you're gonna use to clean the factories, to clean the machines, and it's very hard to keep track of that on each individual product, right? So you're gonna lump those in overhead. You're not going to try to directly trace those. It's just too difficult to try to trace those. So those would be indirect, absolutely. Okay, number 4, wages for employees in the assembly department. Wages for employees in the assembly department. That's key. Say that again.
Product.
Product.
It's definitely product, and what is it? Direct or indirect?
Should be direct.
It is direct because it is direct labor, right? Based on this description, it is direct labor. I'm going to put the numbers here because this is not falling exactly in line. So it's just sort of making me lose track here. Very good. Okay, number 5, wages for employees who delivers the products to customers. Wages for employees who delivers the products to customers. Delivery. Is delivery a product or a period cost?
Period.
It's a period cost, absolutely. Okay, remember that I said shipping? Well, this is similar. This is a period cost. Very good. Interest on notes payable. Interest on notes payable. What do you think that is?
Period.
It's definitely period, and it's not even operational. That's a non-operating item, right? But we're not going to get into that. But anyways, 7, materials used in the production process. Okay, materials used in the production process.
Product.
This is definitely a product, and is it direct or indirect? Materials used.
Direct.
It's direct, right? It has to be direct. It's direct materials. Very good. Rent for the sales outlet in Sacramento. Sales outlet. Notice how these, sometimes they could be confusing, so you have to read where it's at. This is a sales outlet. So what is that?
Period.
That's definitely period. This has nothing to do with factory, right? So think, where is this? Is this factory or is this someplace else? Okay, electricity for all manufacturing equipment as a group. What would that be?
Product.
Product. It says manufacturing. If you see manufacturing, it's most likely a product. Well, almost always a product. Is that direct or indirect?
Indirect.
It's indirect. There's no way we're gonna I mean, and maybe if you find a boss that's very anal and wants you to directly trace the electricity, I hope none of us have one of those, right? But anyways, it's indirect. Okay. Depreciation expense on delivery trucks. Delivery trucks again.
Period.
Period, absolutely. I haven't had the chance to see the Connect problems because of the issues, but I hope that they correlate strongly to this, and it certainly helps you out. Okay, wages for the sales staff. Sales staff
Period.
has to be period, right? Sales staff. 12, factory supervisor salary. Oh, this one is interesting. So it says factory supervisors. What's that?
Isn't that product?
It's product. But is it direct or indirect?
Indirect.
It's indirect. You're going to put this individual's salary in overhead, okay? Because if you have various products, this individual more than likely is going to be roaming the factory, supervising all products. So it is indirect. Company president's salary.
Period.
Very good, period. And advertising expense.
Period.
Very good. Okay, so we finished. You guys did perfect. Okay, let's do the next one so that we don't run out of time. This has to do with variable versus fixed costs, okay? So let's do it, and then I'll tell you the key of how to determine this. You want to compare the months, and you want to compare to see how the change happens with change in production. So you know that Department A did not change. Let me do this over here so that we won't go through the same thing again. A, B, C. Okay, A, B, C. We know that Department A did not, oh God, it didn't work. A, B, C. I thought it would. D and E. It did not change with production. So this cost, what do you think this cost has to be? Fixed or variable or mixed?
Fixed.
It has to be fixed. If you increase production and there was no change in cost, then it has to be fixed. Department B, we have 25,000 and then we have 50. The cost doubles in direct proportion to the doubling of production. So do you think this is fixed, variable, or mixed?
Variable.
It is variable, okay? It's variable because of the way the change happened. The change happened in direct proportionality, right? You can see that the first 10,000 had, you know, if we calculate that, the cost per unit is 250, and the next 10,000 was also 250. So it's all variable. It's 100% variable. Okay. Now Department C did go up, but it did not go up proportionately. So what do you think Department C is?
Mixed.
It has to be mixed. Now, if we had time, I would show you how to break that up. But we don't have time. You can use the high-low method to determine the proportion of fixed and the proportion of mixed, the fixed and variable in this one. But I just want to make sure I have time for the other problem as well. Okay, has anybody here studied the high-low method? No? Okay, well, there's a way to extrapolate this. It's using the high-low method, okay? And it's not very difficult. Okay, again, Department D, you see that there was a change, but it is not proportional. So what do you think Department D is?
It's mixed.
It's mixed, okay? Department D is mixed. And E, Department E, is that
It's fixed.
fixed or variable or mixed?
Oh, I'm sorry. It's variable.
It's
Sorry.
variable. Notice how it changed proportionately. Okay, so this is going to be variable. Okay, and what the heck, I'll show you how to do that. Let's take this one. Okay, we know that this cost increased by $10,000 with an increase of 10,000 units. So the variable cost per unit must be how much? Well, I took an easy one. What's the variable cost per unit?
$1.
$1, right? You divide 10,000 units to increment with the increment here. Now, if the variable cost per unit is $1, and at 10,000 units, you had $35,000 in cost, then you know that your variable cost here was how much? Well, what's the total variable cost here? If the variable cost is $1 per unit, we already figured that out, right? So what's the total variable cost here in this 35,000?
10,000.
10,000, which means that the fixed must be how much?
25.
25, perfect. Okay, so that's the mixed method. Okay, I wasn't going to do it, but I can't help myself. I'm sorry. Anyways, now let's see if we can solve this one very quickly. Okay, we only have 6 minutes. Or if we go over, that's fine with me. But I just do want to respect the time of others that I know might have to leave. So let's try our best to get this one done. Okay, so let's see. It says direct materials inventory on December 31. Okay, so you say that you started off January 1 with 30,000, right? And let me put this over here as that, okay? So January 1, you start with 30,000 DM on January 1. And then it says that you purchased 350, right? Okay, so you must have had a total of 380. If you hadn't sold anything, that means that you would have ended your inventory with 380, right? Okay, with direct materials. We're not talking about inventory here. We're talking about direct materials, right? But it says that you use 345, right? That's okay. So this is what you started with. This is what you purchased. Okay. And this would be your total direct materials available for use, right? Total available. Available, right? And it says that we use 345,000. Okay, 345 was used, right? So used. That means that it went to the work in process probably. So how much materials must we have ended with in this case? What's the direct materials as of December 31? Huh? Anybody can tell me?
35,000.
It has to be 35. Thank you very much, Christopher. So it has to be 35. And there's your answer for number 1. Okay, next question. Direct labor costs for the year. Direct labor costs for the year. Okay, so direct labor costs. So let's see how we're going to calculate this one over here. Says total manufacturing cost to account for. Total manufacturing cost to account for is, where's that? Total factory overhead. And total manufacturing costs over here, okay? Total manufacturing costs. And that's going to be the cost of 1085, okay? And that's the cost that you're going to have in your work in process account, okay? That's the manufacturing cost that you had in your work in process account, including everything that you put in, including what you opened the account with, okay? So if you open the account with work in process with 42,000, right? Okay, let me put this on the bottom because this has to be the total, okay? So my work in process opened with 42,000, right? And it says that I use 345 in materials, right? So that was added to the work in process account. That's the direct or raw materials, okay? Just like we did over here in this example, okay? We're pretty much just doing this over here. The bottom would be the 1,085,000, okay? And then it says that total factory overhead is the other one, right? Total factory overhead is 560. In this case, they just put it together, okay? Factory overhead. Okay. So the one that I'm missing, and all of this is about algebra, right? The one that I'm missing is direct labor, okay? So all these added together must equal 1085. So what we would do is simply do the algebra and take this and subtract this, and subtract this. And that's what my direct labor had to be, right? It's the only number that's going to make this reconcile. Everybody got that? Everybody, so this is what what I explained over here, except that in this example, I did not have an opening balance for work in progress. But many times you have a leftover. Like for example, this $80,000 is going to be the opening balance in the next period, assuming that the period was closed here, right? Okay. Variable factory overhead for the year, well, that one is easy, right? This one gives me the total factory overhead of 560. Total factory overhead of 560. And it gives me I think it gives me the fix, right? Fix is 480. Okay. And so therefore the variable must be the other one, not the other one, 480, sorry. 480, right? If this is let's do it the same way that I did it over here, right? If this is the total, right? This is the fixed, then just use some algebra and you know that the variable has to be 80, right? That's the only number that would make this total come up to 560. Okay. Costs of goods manufactured for the year. Cost of goods manufactured for the year. Okay. So how much did I manufacture for the year? If I put this much in the work in process account, okay? And by the way, when it says cost of good manufactured here, I always like to put the word cost of finished goods finished goods, right? How much did we finish? Okay. If this was the total cost that I put in here, and it says that my work in process ended with 45, that's telling me that I must have transferred how much to the finished goods category. In other words, how much did I finish? Somebody told me, since we're getting close to the end here. How much must I finish? Must I have finished? What's the total cost of goods manufactured? In other words, the total cost of goods that I finished, that I completed in that period. If I put a total cost of $1,085,000 in my work in process account, and I ended with only 45, I must have finished how many?
1,043,000.
Not 43. How much did I finish? How much did I transfer? Not how much I sold, how much did I finish? In other words, how much did let me look for the chart. How much did I transfer out from here to here? Okay, it's very different from cost of goods sold. That's what it's asking me. How much cost did I finish? Okay, so Just do the math and you'll get the answer. If I put this much cost the whole period, but I ended with 45, I must have transferred how much to my finished goods account? How much did I finish? Here, do you want me to, let's do the work and let's do the WIP account. Okay, let's do it over here. Let's do the T account here so you can see it. Okay, this is the WIP account. Okay. I started with 42, right? I put this much. Okay, let me just copy that here, right? Oh, why isn't it copying? Sorry. Okay, which means that I put 1085. But I must have transferred something out because I only finished with 45, right? So I must have transferred something out. How much did I transfer out? Notice that this total is 1085. And if I finish with 45, I must have transferred something out to the finished goods. What's the total that I transferred out?
1.04.
1,040,000, absolutely, right? I must have transferred out 1,040,000 to the finished goods category. That's the only way I end up with that that balance of 45,000, right? So 1040, I'm missing a zero. So this goes to what account? What account does this go to? Where do I transfer this to? Take a look at this at my lecture over here that I gave you. Where do we transfer it to?
It's the finished goods, right? The goods
Absolutely.
available for sale.
Yep, finished goods. So we're going to transfer it to finished goods, okay? So, and this is telling me that my finished goods, it's telling me that my finished goods started, it probably gives me a starting inventory, yes. Started with 36, and I transferred 1,040,000. 1, 2, 3, right? I know that because I already calculated that in the previous step, right? 1,040,000. Let me see. Okay, 1,040,000. Now it's telling me that I sold 1,043,000. So if this is a GL, let me put the line here. If I sold 1,043,000, right? Here you can see it visually. I know I went off on from doing it this way. Sometimes it's easier just to do the T account, especially if you're good at accounting. Okay, so it tells me that I started with 36. I know that I transferred 140, but it tells me that I sold 1043. Right? Is that what it tells me, that cost of goods sold? Yeah. Okay. It gives me that information over here. So what was my ending inventory? It's just a matter of math, right? My ending inventory must be this plus this, which, by the way, they give it to me here, cost of goods available for sale, right? I could have just taken that number minus this. And the answer was my ending inventory must have been $33,000 of finished goods. Okay, everybody got that? So I'm glad I went straight to the more difficult concepts, because we just, we went slightly over, but I hope this was helpful to everybody. And, if you have any questions, please feel free to, email me and contact me, and I'll be happy to help you out. Remember to please, if you could, also attend the Monday night live chats from our lead instructor. Those will certainly complement my live chats, because I'll be focusing more on solving these problems like I did today. And thanks for joining me, and hope you have a good night, everybody. If you have any questions, you can feel free to hang in there. Otherwise, thanks for joining me and have a good night.
Are you going to share this spreadsheet?
I was waiting for somebody to ask that. Absolutely. I'll find a way to upload this. Okay?
Thank you.
You're welcome.
Thank you.
Thank you.
Thank you for making it make sense.
Okay, I'm glad I did. Thank you.
Thank you, doctor. Have a good night.
You too. Take care.